Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Thursday, September 16th. I am your host, Jesse Allen. Thanks for joining us here. Day 3, the final day of the Big Iron Farm Show in Fargo, North Dakota. And we've had a great time here the last couple of days broadcasting live, and great to see a lot of folks up here in the Northern Plains, and happy to have you joining us here once again today for the show. Find us online, markettalkag.com. That's our home on the web. Find all of our streaming sources, social media, and more. It's all there, markettalkag.com. Fairly quiet day in the market trade today. Let's talk about it. Bring in our good friend John Heinberg with Total Farm Marketing. John, good afternoon. And, pretty much it just felt like a risk-off day a little bit, quiet, not a whole lot of movement here throughout the trade today. We were kind of just trading right around that unchanged mark all day, it seemed. What are your thoughts overall on the trade for grains on Thursday?
Yeah, actually, a pretty quiet day. Considering the run we've had, it's nice to see that we can back off a few cents and kind of at least hold some ground. Now, we'll see how the last little trades come out here. But, we have what called 10-day moving average here underneath, or 20-day moving average underneath December corn. That was around this 530 window. Seemed to be a magnet to prices all day today as we kind of danced on both sides of that. But again, you got to think how far we've moved now since that low on the report last week. And we put 40 cents into this to the high today. So it's kind of a spot where we can take a little breath. We did have to digest some, off news this morning. Obviously, export sales numbers came out, 230,000 tons on the corn front, pretty small. That's probably what brought a little bit of profit taking, because that demand side is going to still kind of be out there. And we still need to kind of watch that, especially given global prices on the corn side. But we've seen this rally kind of kick in here for a couple of reasons. We're hearing some questionable returns in some of these early harvest results. We got a lot of chatter about disease pressure in Illinois, Indiana, and Ohio because of the weather. And then basically we got some hot, warm, dry weather coming that's just going to finish this crop off very, very quickly, and that have a good, solid, finish to the crop, and maybe add a few extra pounds on. So there's some questions whether that crop yield is out there. And again, that's something that's still going to yet to be determined.
Well, and I want to stay on that track a little bit just from what we're hearing, because, all summer long we've talked about this, how the Eastern Corn Belt is going to offset the dryness and the losses in the Western Corn Belt. And as you alluded to, we've heard some yields that were rather disappointing so far in the Eastern Belt. I've heard some yields in the Western Belt that were surprising to some growers, but yet they're not breaking records or anything. So, hypothetically, if we have a short crop in the East compared to what we projected, I would have to think that's going to give us a lot of bullish momentum back into these markets.
Very much so. I mean, again, USDA numbers, you looked at them on Friday. We got that little bit of a yield bump on that report here last week. And, again, that was probably some of the strength we've seen come across the entire Corn Belt in that regard, that strength staying in the East. But, when you start bringing some disease pressure in, things like tar spots and stuff of that nature, that's really going to maybe tighten up that picture a little bit more. The other thing, a couple of weeks ago here, we just had a spell 4 or 5 days in a row where it was extremely hot, extremely dry. That just seemed to pull the plug on this crop and say, we're done in that Eastern Belt. And then again, didn't allow it to finish out. So, it's going to be something we got to watch here. We obviously still need the demand side of the equation to stay strong. There's a lot of concerns what's happening with the Chinese in terms of buying corn, or just our regular importers overall. Argentina corn, Ukraine corn, still a little bit less expensive than the U.S. corn. So we're not seeing a lot of buying, but here, we saw the funds really sell into that report last week. We get a bounce back off that report as the numbers were negative, but maybe not as bad as the market was pricing in. And then we're hearing just some impatience by the funds basically saying, well, okay, we think we got a low in. We want to start owning this now here versus later. And that's why we're seeing some money flow in. It's always nice when you get some negative numbers, then you get a positive reaction out of that. That just tells you things are priced in and the money might want to start working the other way.
On the soybean side, we got some of those cancellations in, and then we got buying here today. We think about demand, we think about the issues in the Gulf and whatnot, and starting to get some of that reopened. But I don't think any of us were really surprised that China canceled and then bought some more back. But obviously, looking at demand, we're getting into that window where we're really presumably going to see that demand ramp up. And it feels like that's going to be another bullish factor in this market trade moving forward as well, if it comes to fruition, what we're expecting.
Yeah, I still like this soybean market going forward. Again, even though the USDA moved the supply side up to 185 million bushels of carryover, that's still extremely tight. We got some factors out there that we just kind of keep an eye on. First off, talking about the Chinese, export sales numbers this week were strong. We had a great crush number in August that came out yesterday with a solid month of soybean meal exports last month, actually our best August on record. We saw that reflect in the soybean meal prices today. Maybe for once that price can get a little bit over the oil. Then the other side of it too, the Chinese are basically from position wise, they're strongly short this market, and now they're buying beans. So as they buy the beans, they lift their short positions and lock in those gains that they had, cheapening up their costs. Even those cancellations that we got yesterday, they came back, at least the Chinese part of it was purchased back already today. Then on the other side, that's just a little bit friendly to this market. There is some talk and basically been confirmed that the Chinese picked up 8 to 10 cargoes of Brazilian beans here this week for October delivery. Typically, that's when our window is, but they're concerned about getting supplies, and because of the Gulf, that's kind of, want to make sure they're covering their needs. But they're buying those beans almost $4 or over $4 a bushel higher than the board price is right now. So if they're making those types of transactions, this market knows that it's okay to go ahead and move prices a little bit higher. I'd like to see us close above $13 on the end of the week, and I'd feel a little bit better about that on that November contract. But again, it's just a market that just still has some things working for it that could still be friendly, especially going forward here as we're in that window. If we get that Gulf running, where we're going to be pushing beans out the door pretty quickly.
Very, very true. John, let's flip over to livestock today. A little more action there, at least in the hog market. We saw some spread trading yesterday between that October contract and the rest of the contract months today. Saw some more of that again, it appeared, and then we kind of just took off to the top side here. What do you make of hogs on this Thursday?
Well, we got to look at that hog market. The biggest thing we got to keep an eye on is this difference between the futures market and where the cash market is. Typically in months like December and February are running at a premium to the cash market. And right now today, even with the strong move in the October contract, we're still trading $10 under the cash index. In December is trading $11 underneath that cash, or excuse me, $20 underneath that cash index. So there's some premium out there that needs to probably tighten up. And, we're seeing the index come down. We're seeing cash market come down, but this futures market's well oversold, especially with the hard push last week. So we got a big reversal today. First off, on those deferred contracts, that's a classic outside bullish reversal on that December contract today. So technically the market's improved. We had to turn a little bit yesterday in October, and that followed through again today. So the market's improved technically, which could bring us some money flow back in. Now, I'm not saying we're off to the $100 level or anything of that nature. Really good resistance over top that October contract around that $89, $90 area. We just struggled with that before this last break. So don't be shocked we see some push in there. Biggest key still needs to be where's the retail demand, what's happening in terms of product movement. And we have seen that maybe start to turn the corner the last couple of days and start working those carcass values a little bit higher, which will help add some buying power into that pork market if that continues.
And we watch weekly export sales, and we've been watching to see if China's a buyer of pork. And if I remember right, I believe they were on that report today, buying a little bit, John. I don't remember how much it was, but I know they weren't the top buyer of pork here on the weekly sales report.
Yeah, they were pretty minimal. I believe it was about 1,500 metric tons. Not a lot in terms of the buying power there, which is disappointing after a good week last week. One thing, though, they're going to start bringing some pork out of reserves. They're going to be starting to stockpile. Pork prices in China are extremely low, and that's something that they want to start moving some more product in this window. So maybe they get a little bit more active in the market here just to continue to build their stockpiles and reserves. Like I said, we saw them purchase about 15,000 tons last week. This week, they're on the sidelines. So we'll have to see how things kind of shake out there, at least in terms of that export front. I think longer term, we'll be watching for that. Plus also we're also going to start looking at some more numbers here. Where are we going to be for hogs going into the end of the year, into next year? Quarterly hogs and pigs numbers coming up here again at the end of the week, next week. So we'll start seeing some numbers there, as well as those cattle on feed numbers coming out as well next week.
John, what about the cattle side? We were a little bit of a mixed bag there today. Live cattle were lower. We saw some strength in feeder cattle, a little bit mixed, I'd say at least. But what are your thoughts on this cattle market? We had that JBS fire. We've had a lot of things, a lot of news in this cattle market. But it just seems like we're kind of going back to being sluggish right now.
The cattle market's still pointing downward for me, at least at this time frame. We still got a lot of premium out there that we can take off. You go look at the two different markets. You go look at hogs. We got about $11 from October to December. That to me tells me this market wants to lift higher, at least in those deferred contracts. Where the cattle market were the exact opposite. We got a $5 premium from December to October. So that puts a little bit of a slippery slope involved here. The cash market, again, steady basically this week. Retail values were down fairly strong last night, as well as, again, midday today. So that just keeps the selling pressure in that market. Even though we had that little pop and recovery around that JBS fire, that was just more of a technical trade where people tried to jump in and wash this thing out, thinking it was like the fire we had here a couple years ago. And it wound up the next day they were going back on the line. So people ran right out of those positions immediately. And that's why we saw the whipsaw effect that we saw there. Right now I'm still a little concerned. I did not like that close today in December cattle under 129. Again, with that premium over to October, just feels like we're on a bit of a slippery slope unless we see something really turn fundamentally to maybe bring some money flow into that market. So still cautious, still love the long term given the cattle numbers, and maybe the cattle on feed report next week might be our turning point. But I'm starting to look out at those calls out there in April and June and starting to get those in for people who are going to have cattle in that window to get some paper over top those cattle with a hopeful pushback that we can get some good sales in and then keep that top side open.
John, on the outside markets, it felt like a little bit of a risk-off day there on the broader commodities, the stock market. Any thoughts with what we're seeing in the outside markets and how that's affecting our ag trade?
Yeah, biggest focus for me has been what's going on in the energy market, and keep an eye on crude oil. Crude oil was softer at the start of the day, and now it's starting to get a little bit again. Good, strong move there yesterday. We got these energy stocks really starting to lift the whole commodities sector. Demand continues to be something that we're watching grow, and now we're really focusing on the supply side. And today is one of the first down days we've had in natural gas. That price was pushing to 8-year highs, and again, reflecting some of the supply-demand issues that is facing that market. It could be one of those markets we're really going to have to watch, especially from the standpoint of heating costs as well as the industrial uses for natural gas. It's a whole other topic to spend another time on too, but the impact of that in terms of those fertilizer costs for our producers. So those energy markets are definitely something I'm keeping a close eye on. Stock market's going to do what it needs to do based on the amount of money flow that's in and out, but those energy markets right now are something that look like they got something into them here as we move into the fall.
John, great insight as always. Any other final thoughts you have for us today on Market Talk?
People keep asking me today regarding corn, what should we be doing? If you got those bushels, you're going to be selling this fall. You don't have anything underneath. This market still is dealing with, supply demand picture. We don't know what the numbers are going to be. Make sure you're getting those supplies locked in, those numbers, those bushels that you don't have a home for here this fall. We got some good value on the board. I've told some few guys to move a few bushels here today and reward this rally. Keep those puts out there. They're fairly cheap and inexpensive. Just make sure you're playing the safe side of the risk card here going into harvest, because again, all it takes is one black swan event or another number that jumps up out of expectations, and this market's still got some room to sell off very quickly on the technical side. Just look what's happened in cattle and hogs, and you can see that type of technical swoon regardless of the fundamentals.
John, producers need to reach out to you and the team at Total Farm Marketing, get a little advice on what they're doing with their marketing. What's the best way to do that?
Again, I'd love to chat with them all anytime they want. Give me a call, 800-334-9779, or shoot me an email at johnh@totalfarmmarketing.com. Again, don't forget that website, totalfarmmarketing.com. A lot of great resources and information out there for the producers.
John, appreciate the time as always. Have a great weekend. We'll talk to you next week, sir.
Sounds good. Have a good week.
John Heinberg with Total Farm Marketing, our guest today here on Market Talk. That's going to do it for the Thursday, September 16th show, live from Big Iron in Fargo, North Dakota. We've had a great 3 days. Thank you for joining us here. Find us online, markettalkag.com. I'm your host, Jesse Allen, wishing you and yours a great afternoon.